The group current business is very different from that 12 years ago, when it was one of the largest offshore supply vessel owners and operators in Southeast Asia. But Bumi Armada has restructured so that it currently focuses on floating production platforms. Malaysia accounted for only 1% of its 2023 revenue. The bulk came from overseas operations such as Asia, Africa, and Europe. Revenue over the past 12 years showed a cyclical pattern. There were 3 years of losses. The group attributed the loss in 2015 to weakening oil prices. The 2016 loss was due to low revenue, gross profit margins, and a 1.7 billion asset write-down. There was another major asset write-down of 2.2 billion in 2018. You can see the profit improving post-2020, resulting from the improvements in gross profitability and contribution margin. The most striking thing is the reduction in the variable costs. Given the profit recovery post-2020, you should not be surprised to see similar patterns for the returns. The average returns were lower than the respective cost of funds, implying that the group did not create any shareholders' value over the past 12 years. While the sector revenue declined, Bumi Armada's revenue did not follow suit. Bumi Armada also had improving return on equity. Post-2020, Bumi Armada delivered better performance than the sector. Compared to its peers in the floating production platform sector, I found that Bumi Armada had better EBIT margin and its return on capital was also good. I would rate Bumi Armada as financially sound based on its debt reduction and cash position. But I have two concerns. The group had a poor capital allocation track record. It also had a very high reinvestment rate. Over the past 12 years, the group incurred a cumulative loss of 1.4 billion. Without the rights issue, the shareholder funds would be reduced. The NTA of Bumi Armada was $1.03 per share compared to its market price of 57 cents per share. I reverse engineered the market price based on its earnings power value. I found that the market price represented the 2023 revenue with 7% higher than the average 2021 contribution margin and capital turnover. Bumi Armada has turned around its poor performance, but this is a group whose performance is tied to the expenditure of the oil and gas companies. I see Bumi Armada as a cyclical company. Unfortunately, the market is not pricing it as such. It is probably a risky bet. The information presented here is for educational purposes only. For more details, read the blog article. Thank you.